Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has managed to clear the top side of that 70.45 resistance and reinstating a slightly positive stance into the Tuesday session. Also to note, as widely expected, the RBA kept its interest rates on hold at 0.1%. As widely expected in the last meeting for this year, the market is still maintaining to a slightly viewing from the RBA a dovish sentiment, and therefore a little bit more mixed interest has come back into play here as we look to the top side. Now, as I stated yesterday, I did feel the market would stage a recovery and maybe towards this hurdle somewhere around 70.90 and a cap that's a little bit above that trend line because we've seen a couple of spikes there and comes in around 71.20. I feel that there will be a bearish attack or an ambush, and the fact is that we could see another down challenge from there. I'm not overly bullish, and as you can see over the last few weeks in this down channel, the bulls have only been able to last at least 2 days, and so this being the second attempt in the second day period could eventually see the market reverse away from that 71 handle and look back towards 69 cents and reassess from there. With eyes looking to the inflationary numbers this week in the US, the US dollar, which measures the greenback strength against a basket of 6 major currencies, is still maintaining to a steady footing above that 96 handle. Overall, though, since the whippy price action that we saw late last week, mainly on the back of the non-farm payrolls numbers, that being a little bit disappointing, is that we've seen a bit more of a choppy price action that could continue to the downside for the euro. Therefore, I'm looking down towards that 111 region with the immediate target around the low 112. Reassess from there. As the market seems to shrug off the recent new variant, the outlook for dollar yen is a little bit weaker to the yen, that is, and therefore the strength coming back into the US dollar has pushed the market back to the top side of the range, seen roughly around 114. As we've seen previously to that top side of the range, hasn't sustained and therefore could again see a reversal or rejection and look back towards that key support level of 112.65, which is still holding relatively well. Sterling finding a little bit of an upstep as the bullish divergence kicks into play. Now, I was recently concerned that from that spinning bottom that we could see a reversal, but the market is staged for the last 4 days, or today, including the 5th, inside range day. Now keep an eye on this pattern here, because if the market can manage to close above that 132.80, which was confirming the downside, but now may confirm the upside, could see a push up towards that top side of 135, where I've outlined here with the immediate target seen around 133.5. Still note that there was a lot of talk that we could still see a rate hike in the UK, but from a technical point, I would like to see a little bit more confirmation from these indicators to support the bullish move. The RSI just breaking through the midway point, no confirmation from the MACD yet, so it's still likely to be a choppy range from both sides of the support and resistance. CAD yen finding a little bit more momentum due to the slightly weaker yen and now pushing back towards that top side around 89.5, with a cap still maintaining around that 90 handle. Overall, though, I think the market may actually eventually plummet back towards that 87 region where the blue line outlines where the base is in the short term. Although there has been some bullish divergence when it comes to gold, there's been little uptake in terms of the market to push higher. Still a little bit hesitant to push back towards that top side of the range around 1,800. Still overall, I believe gold is bearish and maybe see another challenge towards that 1,757.64 level, which if breached exposes 1,722 to 26. Wrapping up with oil. Well, after the bullish hammer, we got further confirmation as the bulls step in and now potentially look towards a target of around $73 a barrel and reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start of the day.